Hey everyone, how's it going? My name is richardlmoglen and welcome back to my channel. So I've been getting some questions lately about my chart layout, the different indicators and moving averages that I use. So I figured I'd make this video kind of explaining each component and how I use it in my trading. So first of all, I do want to say that I think you want to keep this as simple as possible. You don't want to bog down your screen with too many oscillators and MACD histograms because that can obscure the actual price action and what's going on with the stock. So to start things off, let's talk about the Bollinger Bands I use. So I use a 15 period, 2 standard deviation Bollinger Bands, and I keep them very, very light, just like that. And what these allow me to do is kind of determine whether stock is very, very extended, either up or down. And at this point, it overshot it and then pulled back within these bands. So I find these pretty helpful. I don't rely on them. I won't sell just because it becomes extended from these moving averages, but it is something that I'm looking out for once a stock gets way beyond this upper band or way below this lower band right here. So next up, we've got the 3 moving averages. So let me make those apparent on the screen. So I use the 10-day simple, the 21 EMA, and also the 50 SMA as well. So the 10-day is just a good gauge of kind of short-term trend. So after stock is broken out from a downward trend line, I want to see it kind of ride either that upper Bollinger Band and then stay above this 10-day right here, just like NEO did after this breakout. And then the 21 EMA is more of a longer-term gauge of trend that a lot of these growth stocks really respect within their runs. I mean, NEO for the longest time didn't close below it, and I think during that time it increased several 100%. So the 21 EMA can be a fantastic gauge of when a stock is continuing to trend and is under accumulation, and then when it breaks that, it could mean it's about to fall to the 50 SMA or potentially build out another base. And then the 50 SMA, as with a lot of other canceling traders, I use that kind of as my guardrail, and I want a stock that I own to stay above that key moving average, and I will look for pullbacks to that key moving average to potentially buy. NEO, I didn't pull the trigger today, but was an excellent example, a great reversal right near that key moving average. And this is another important thing. These moving averages are just kind of imaginary lines, meaning that price does not have to fall right to the cent back to them to then bounce off. They're kind of areas of interest. So I think that's an important thing. And next up, we've got this blue line right here, which is the RS line. And in TC2000, I have it set to the SPY. You can compare the stock's price movement to anything you want. I use the SPY as a representation of the S&P 500 because the SPX does not update during the actual trading day. So this is a very important thing and a very helpful part of my chart layout because it allows me to kind of determine how the stock is performing versus the rest of the market. Is it outperforming? Is it underperforming? And it also is helpful intraday. So if you go to a 5-minute time frame, you can see that throughout this day, NEO was outperforming the general market, especially during this last trend into the close. And you can even kind of compare it to other growth stocks. So let me go ahead and compare this to, let's see, what didn't do well today. So we've got PLTR, for instance. So you can compare it to PLTR, and once again, NEO is outperforming. So this RS line, very, very handy, but usually I have it set to the SPY. And this is especially helpful during times of market weakness. And if we bring up DocuSign and go back to the March crash, you can see that DocuSign was actually making new relative strength highs before price during this overall market weakness, which is a potential sign that once the general market resumes the uptrend, this stock can really take off, and DocuSign definitely did that, increasing about 140% from this cup and handle pattern right here. So this RS line is very, very important. I think you can add it in TradingView as well as TrendSpider and different platforms. So I highly recommend adding this to your charts if you don't have it on already. So next up, we've got the volume, and you want to look at volume along with price to kind of determine the emphasis of those price moves. And if we go back to NEO, you can see that you had a huge spike of selling on this day right here, which was this downside reversal, and it continued to go up for a few more days, but shortly after that it topped. And then you have some nice reversals on volume, indicating that there is support within this price base by institutions. And in my volume pane here, I've got a few different things. I've obviously got volume with black or blue representing an up day, or red representing a down day. And any blue bar is basically an up volume day that is higher than any down volume within the last 10 bars. So there's just one more way of kind of determining whether it's above or below average volume. And the other way is this line right here, which is the 50-day average volume. And basically, if a stock's volume that day is above that line, it's above average, or below, it's below average. You can see that NEO has had some huge spikes here, especially on these key breakouts. Nice blue bars on this break of the downward trend line from this base quite a while ago. So I think volume is very, very important, and you want to look for these outlier days, whether they're up or down. And one last thing, you might notice that on some of these bars, like this one right here, you've got a black rectangle. That just means that TC2000 has truncated the top of that spike because it was greater than 3 times the average volume. And that just allows me to basically compare different volume days better, because if we took that off, you can see that all this gets squished downwards if we want this to be not truncated. And with that said, I think this is really all you need to analyze both price and volume action. But there are a few different things I have up here that kind of pick out certain price movements that I find relevant, whether it's entries or exits. So first up, we've got the Teal dot indicator, which is basically a stochastic cross. And I have this as a kind of teal histogram down below on this chart. And this is just kind of a short-term momentum indicator. I'm not relying on this too much anymore, but I do keep it on the bottom of my charts. And next up, we've got the green dot indicator, which was developed by Dr. Eric Wish. Once again, this is a momentum signal. And overall, I don't use this too much, but once again, it kind of confirms a move off a kind of swing low like right here. And next up, we've got the 3-bar break up, which is something I've learned as a part of the Ticker Monkey community. And overall, this is when the price breaks above a short-term consolidation, and often it's a pretty good entry point, especially down near the bottom of a base. So if we go back to Peloton here, I entered Peloton on the 3-bar break above the short-term consolidation right near the 50 SMA and this overall nice right side of the base. So I'm always looking to use this and also the green and teal dot within an overall constructive price pattern. So that is the 3-bar break up, and also we've got the 3-bar break down, which can signify the end of a trend. And you can see that Peloton had a 3-bar break down on this Monday right here, although it wasn't on high volume. So what I'm really looking out for is a 3-bar breakdown on very high volume. That signifies that maybe there's going to be more weakness. Maybe this would pull back to the 21 EMA or even the 50 SMA. And if we bring up some different stocks, you've got PLTR with one yesterday. A lot of the growth stocks, the leaders right here, had 3-bar breaks last trading day. So if we go through XP, I sold my position because of that 3-bar break and high volume. So there's just one more thing to look out for. And next up, we've got something I've also learned in the Ticker Monkey community, which is the oops reversal. And this is when, and if we bring back NEO, the stock gaps down and then moves back through this low right here and finishes and closes above that low. So often within a short-term shelf, there's a pretty good entry. If we go to LSPD from last week, you've got an oops reversal right here. It gapped down to the 21 EMA, found support there, moved back through this low, and then finished very strong in a bullish outside day. So that is the oops reversal. And next up, we've got the upside reversal, which I've made a complete video about, which will be linked above right now. But basically, the stock has to take out the prior day's low and then finish with a strong closing range. And lastly, we've got this one right here, which shows up as a blue histogram down here. And this basically signifies some different kind of strat reversals, which I'm still learning about. But overall, like an inside day and up or a 2-2 reversal, that will show up down here. So once again, I want to make it clear that this stuff is extraneous. You do not need to use it in your trading. I find it personally useful to make sure I'm noticing stuff like a 3-bar break, but all you need is really the moving averages, the RS line, and volume. That's it. You can be incredibly successful with just those indicators right there. And that is kind of my chart layout. And I do also want to mention these things up here. So I've got the weekly closing range, which Snap right now is at 57.2%. And this is basically where the stock's price is relative to the week's high and the week's low. And then you've got the daily closing range, which once again, where the stock's price is today relative to the day's low and the day's high. And then here you've got the up-down volume ratio of the last 50 days. So it basically sums up all the up-day volume and sums up all the down-day volume and finds that ratio in between them. And I like to see at least one greater than 1.2 ideally, and that is a good sign of accumulation. Moving on, we've got the A21, and this is basically the percentage above the 21 EMA. And I basically want to make sure that my stock isn't getting too extended from this moving average, or you can have pullbacks like we just saw within the past 2 days. And then lastly, we've got DV, which stands for dollar volume. And I want to see greater than 50 million in this category. And this kind of limits you because you've got some IPOs like Max where they look strong, but that dollar volume is only 9.5 million. So big institutions like Fidelity Contra Fund don't feel comfortable entering these positions just yet. So you kind of want to target more liquid IPOs like PLTR, which trade 1.5 billion on average. So that's a quick run through of my chart layout as well as this bar up here and kind of how I use it in my everyday trading. And I will be making a sister video to this one, which covers this watch list with all my different columns and how I use it intraday to track the leaders. And I think this is very, very helpful and a great part of TC2000. You've got volume buzz, which is very, very helpful. You can sort by all these different columns, and it makes it very, very easy to track a large number of stocks. So let me know if you'd be interested in seeing a video just like that. And all in all, I'll have a link to my chart layout down below in the description, which you can download if you use TC2000. All I ask in return is that you leave a like down below on the video, and of course subscribe if you are new. But other than that, thanks so much for watching. Best of luck the rest of the week. I'll see you guys in future videos.